Our Premier account is an international bond that can be attractive to investors looking to invest in a tax-efficient way, particularly those planning time abroad in the future. So what is an international bond? Well, in our case, international simply means that it's based in the Isle of Man or Dublin. And a bond is an investment portfolio wrapped in a life assurance or capital redemption policy, giving it certain tax advantages, although the element of life cover it provides is minimal. How does the Premier account work? Well, a basket of investment funds goes into a portfolio. These funds could invest in stocks and shares, corporate bonds, and high-interest deposit accounts. Your investment advisor will help you to build a portfolio that suits your investment objectives with acceptable levels of risk. There's no limit to the amount you can invest and no set investment period, unless the policy is on a capital redemption basis. And because this investment is an international bond, you are able to take money out regularly and defer any tax on these withdrawals up to a limit. As you'll see in the following example, this can be very advantageous. This is Dr. Joseph. He invests £250,000 into the Premier account, and his investment advisor selects a range of funds. The income and growth generated by these investments can be rolled up virtually tax-free until he cashes in the bond. But if he'd like to withdraw a regular amount, he can take up to 5% of the total amount he has invested as tax-deferred withdrawals each year for at least 20 years. This means that any potential tax on these withdrawals doesn't have to be paid until the bond is cashed in. Dr. Joseph can choose to take payments monthly, quarterly, half-yearly, or yearly. And if he doesn't need this regular amount, the 5% allowance is carried over each year. So if, for example, he wants to take money out after the 5th year, he could take up to £62,500, which is 25% of the amount invested, without any immediate tax liability. However, taking more than this cumulative 5% allowance is known as excess withdrawal, and the amount over the 5% allowance will be assessed for tax. 5 years later, Dr. Joseph retires. By careful financial planning, he now has a small amount of taxable retirement income and is a basic rate taxpayer. He decides to cash in the Premier account. Despite being a higher rate taxpayer when he started the investment and throughout most of his working life, he could now only pay basic rate tax on the profit on all the investments held within the bond on encashment, offering significant potential tax savings. And had Dr. Joseph been working or retired overseas, the investment could have become exempt from UK tax altogether. The Premier account is also very flexible. Your investment advisor can buy and sell investments as they wish, without it being treated as a disposal for capital gains tax purposes. And in the event of your death, it could continue under another owner or be paid into your estate. You could also put your account in trust, reducing your potential inheritance tax liability. Please bear in mind that this product may not be suitable for everyone due to the level of risk involved. As with all important investment decisions, you will need to speak to your professional advisor before investing.